Hi everyone, just wanted to hop on today and make a quick video referencing the stock market. I've been having a lot of conversations with people as of lately, especially since I did my last video on Viking Therapeutics and the insulin shortage. It's kind of spiked a lot of conversations between me and some of my friends asking, when should I buy stocks? Should I buy this one? Should I buy that one? Is this going to go up? Is this going to go down? And, ultimately, I don't know. I don't know if anything is going to go up or go down, but I do want to share with people how I form my opinions on how I should buy something or wait or sell something. Right up front, this isn't any financial advice by any means. This is just my opinion. This is just the way that I tend to approach the stock market. And I just wanted to make a video so that way I could direct some of my friends to what I typically do. So right now we're seeing a really interesting thing. We're seeing, we saw basically the beginning of this week, or it was actually pre-market this week on Sunday, a bunch of stocks sold off, like a lot of stocks sold off. There's a multitude of reasons for that, and that's for another topic. But basically what's happening right now is the title of this video: the battle for the 200 EMA. What is an EMA? For any of you that don't do stocks and don't know, it's an exponential moving average. So what I tend to do is, if you're looking here at my screen on Robinhood, let's take these off and put these back on. These are the ones, so the green is the price and the moving averages are the colors. So this is the way that if you use Robinhood, when you go into your advanced chart, there's a little button that you can hit for your advanced chart. And you'll see that it pops up with moving average, 10, 50, 200. What I do is I don't tend to base any of my decisions based off of the moving average. So I get rid of that. I don't like to view that. What I do is I view the exponential moving averages of the same values, the 10, the 50, the 200. If you don't know how to do that, you can just add one here. I can't add any more, I don't think, because I've already got 3, but you would click on exponential moving average and type in however many days you want. But let's look at Amazon right here. So the 200-day moving average is the slowest forming one. It almost looks like a straight line in relation to this one. The purple is the 50, and the orange, or whatever that is the 10. So you see the quicker moving averages are the shorter duration ones. So the resolution of those moves are more closer related to the actual price. But what we see here is, look at what happened, let's say, what is this, back in October. The price was riding the highest moving averages, the 10, and it sliced through it. Not only did it slice through that, it sliced through the 50. So what happens after that? It tries to retake the 10, retake the 50, and it fails. And it dumps down below the 200. So these moving averages are very closely linked to support lines. And basically what happens is a stock price will, let's take this right here. It dipped below the 200, and its first action was to blow out of the 200. It blew out of the 200, it blew out of the 10 and the 50. And once it got there, it started riding the 10. When it got up and it started falling back down, it didn't fall below the 10. It didn't fall below the 10. And then here it does. And where does it go? It goes to the 50. And as soon as it hits the 50, it bounces off of it. Here it dips a little bit below, but it bounces off the 50, and then it starts riding the 10 wave again, all the way to here, when it slices through it again. And then it goes down to the 50. The 50 is now the support. It gains its strength. It goes back up. It It rides this 10 to 50 line. These two lines are actually pretty close together, which is a healthy thing if the orange is on top of the purple, if the 10 is on top of the 50. A healthy look is you want your shortest duration estimated moving average above your next and above your next. So this is 10 days, 50 days, 200 days. So this is a healthy bullish sentiment. Now over here, what's happened is the closer we get to the current day, what I see is this stock in particular, Amazon, in my opinion, has lost its momentum. Look, it slices through the 10, the 50, and then when it tries to come back up, because really the price is not determined by how high it goes. It's determined by how high it stays once it starts retracing. So here we get up to the high of, around 200, and then it reaches its limit. It bounces off 3 times off of roughly the same number, and then it goes slices like a hot knife through butter through the 10 and through the 50. So now where we're at is we have our 10-day moving average and our 50 inverted. Now the 10 is below the 50, and now the 10 is almost below the 200-day moving average, which is not a good sign. Now, it doesn't mean that Amazon can't recover from this. It doesn't mean that Amazon can't keep going up. Like, ultimately, I think it will. But is it the best place to put your money right now? I don't think so. Because what happened here is it lost its momentum, and now it's down at the 200. If it were to have bounced off the 200 right here, then I would say maybe there's a chance that it retakes the 50, retakes the 10, and keeps going up. But right here, this is a very hot knife through butter, as they call it. Look, it just straight down through the 200. Now, when it's trying to retrace and go back up, it doesn't look like it's going to reach the 200. So it's going to keep falling. And right here, where do we have? We've got the top of this line, the top of this back in January. Where's the next level of support? I'm not great at calling out support lines and where it's going to fall exactly to, but one thing I'll say is this number right here looks pretty enticing, 120. Now, I'm not saying that Amazon is going to fall to 120. It could sort this stuff out real quick and then keep going up. However, this is a concerning look. When the price is not above the 200-day moving average, it is not a good time to buy it. I repeat, not a good time to buy it. What you really want to see is something like this, where it goes over it bounces off the 200, and then goes to the next support line, or even the next one above that, and rides that line. That's when the stock has recovered. Over here, in my opinion, this has got a couple of months before it really sorts itself out. And I think what's happening right now, in my personal opinion, is that money is headed out of large cap stocks for the most part. Things like Apple, let's look at, so this has been Amazon, by the way. We've been looking at Amazon. Let's shift this over to something like Tesla. So here we go into Tesla. If we go into our advanced view, what I like to do is look at the yearly time frame. First thing, yearly time frame, in my opinion, gives you the best outlook for, is this stock healthy or not? And on that yearly time frame, I like to look at a daily interval. So with Tesla, we've been having this battle of the 200 for quite some time here. And actually, it rolled over the 200 and has been fighting the 10-day moving average inverted under the 200. So right now we're seeing the battle for the 2 right here, where all of these moving averages are now sort of converging, and Tesla is trying to restack its moving averages and get some momentum so that the shortest duration moving average is on top. Let's go to a really healthy looking stock, or maybe not healthy, but I do want to touch back on VKTX. This is Viking Therapeutics. Full disclosure, I do have a position in this, but Look at this on the yearly time frame. This is a very interesting view because look back here. This is when the stock is sleepy, and this is before really any big news of, back right around here it came out with trial data explaining how its trial of its current medicine is having positive results. So it shot up on that news. But look what happened before that. This is a sleepy stock. It's just moving sideways. It goes up a little bit, it goes down a little bit. But then right here, off of some news, the price breaks out over all of the moving averages. There's a big move. And from here, the price rides on this 10-day moving average. Just keeps going. It bounces off of it. It dips a little bit below, but it keeps going, and it keeps going, and it keeps bouncing, and it keeps bouncing. And here, surely, if you're looking at this on a day-to-day time frame, you're like, well, this price is about to cross the 10-day moving average, so it's probably time to get out. Well, look what happened. Instead of going below the 10-day, it shot up like a rocket, or as the moon boys tend to say, it went to the moon. And then it started its battle all over again. Started up here on the 10-day moving average. It bursts out like a rocket ship. And then where is the price? We'll find out when it falls. And it falls through the 10. And it starts its battle trying to maintain the 10-day moving average. It goes above it, it falls below it, but its average price is sticking to this 10-day until it goes down to the 50-day and it bounces off of it. It gets a little bit of momentum. It tries to hang on to the 10, and eventually it falls through the 50, causing the 10 and the 50 to then invert. So that right there is a sign. Right here, where the 10 crosses the 50, that's a sign that we're headed into some bearish territory normally, in most cases. So as we go sideways here, we're looking at this trying to break the 50-day moving average, and it's having trouble. However, look what happens. It never breaks the 200. It never goes below the 200 so far. And what we get is a nice little squeeze play between these upper moving averages and this lower moving average. And eventually, this stock is going to break out one way or the other. And as these moving averages come closer and closer together, one of two things is going to happen. It's either going to break above all of these moving average and then start going up again, or it's going to break below the 200 and it's going to look for its nearest support, which is going to end up being back here before it went up. Now, like I said, I'm not great at calling support levels, but I am relatively keen on figuring out is a stock bearish or is it bullish? Let's look at another one. Let's look at Apple. Let's look at the advanced view, the yearly time frame. What's happening with Apple? Apple's got the same thing going on. It fell quite a bit over the past couple days. But its price, the green, is currently battling it out with a 50 and the 10. Now, if it doesn't pass the test over here, which it doesn't look like it's going to, when it comes down and checks back, it doesn't cross the 10. It barely crosses the 10, doesn't cross the 10, goes through the 50. Now it's up above the 10 again, but my sneaking suspicion is that it's not going to hold its support here, and it's probably going to come down a little bit closer to the 200. Is that the case? Is that absolutely going to happen? No. I mean, news could come out tomorrow that Apple cures cancer, whatever, something ridiculous. And this stock could go to the moon. And that's where they get everybody, is the emotional tie to what you're trying to buy. I could care less what the stock is. I could care less if it's Apple or if it's, I don't know, SpaceX, or SpaceX isn't a stock. What I meant to say was Virgin Galactic. Virgin Galactic is an abysmal stock at the moment. But between the two, I don't care. I want to trade the chart that looks better, that looks healthier, because a healthy chart is going to lead to healthy gains. And a risky chart, as in something like this, a lot of people say, well, I want to buy the dip. It's it might be a little bit early to buy the dip, because right now the estimated the exponential 200 day is right down around 195, maybe a little less, 193. So do you want to pay right now $216 a share, or would you rather pay closer to 195? To me, I'm looking at 195. That sounds nice. But if this keeps falling, the 200 is also going to fall. So by that time, it might be down to 186, or it might be down to, it might come checked all the way back down into 165 territory. It might go even lower. Who knows? But you'll start seeing the patterns if you look at stocks this way. This stock here, Tilray, is a marijuana stock. There's a lot of talk about Kamala Harris and weed legalization and a bunch of stuff, but let's look at the chart here. The price over the past year, ultimately it's been going sideways, but it hasn't been dropping a whole bunch. It's been going over the 200 and checking into the 200, checking into the 200, checking into the 200. Eventually, it's going to do one of two things. It's going to break above the 200 substantially with a stock like Tilray, probably based off of some legalization news. So-and-so says they want to blah, blah, blah by the end of the year. This could go straight up. Or so-and-so says Tilray is in severe debt because they haven't gotten weed legalization yet. As another scenario where this could be cut in half. But this is an interesting battle for the 200. And you see right now across the majority of all these stocks, this is C3AI. This is a very interesting company too. Daily moving average, what do we have again? We have all of the moving averages are pretty tightly condensed, and it's a battle for the 200. It keeps going through the 200, through the 200, through the 200, through the 200, through the 200. It's not going to get any momentum until downward or upward until it gets either above or below and is confirmed. What do I mean by confirmed? It goes above the 200, and then when it checks back, it doesn't go below it. Let's look at Palantir. This is a great example of a healthy stock at the moment. So on the yearly time frame, it never even touches the 200. It comes close a few times, but right now what we've got is a interesting setup that I personally think, I'm not trying to call it, I'm not trying to say, oh, I told you so, but and full disclosure, I do have a position in Palantir as well. I really wouldn't be surprised to see a very big move, like a very big move with Palantir coming soon, because the way that this is all sussing out over here, the EMA, the 10-day EMA just got back on top of the 50, and then price sliced through both of them and immediately came back up. That's a very bullish signal. Sometimes it's not. This is all situational, but what I'm looking at here is this stock is doing pretty well. So something that you could do here would be wait for it to check back into the 10 or the 50. And if it does, right around 28 or even 26, and if it stays above that, then you're good to go. So how would I approach that? I would look at this stock as it's going down, if it does. And if it starts going down, put a limit buy on it and see if you put a limit buy in for, I don't know, $26. If it goes to that, set your limit stop loss at around the 200-day moving average. That's kind of getting into another topic. How tightly do you put in your stop loss to the 200? That's a whole discussion in itself. But you could take advantage of this setup right here and potentially get into the stock right before it goes exponential. I'm not saying this one's gonna go exponential. I'm just saying that's kind of the way I feel about it. I'm not personally buying any more of this or selling any of this. I'm just waiting. SoundHound, this will probably be the last one I go over. This is another really interesting one. So SoundHound is a company. I don't know if you've ever heard of the app SoundHound, but it's It started as a way for people to identify a song that they like, but they don't know the name of. So they just, you press listen and it listens to the song and it spits out what it is. So it does that by AI learning algorithms that are able to analyze the waveform of audio and determine not only like what a song is, but like who's talking, if it's genuine. Like SoundHound has a ridiculous amount of technology that, in my opinion, is going to be implemented across the board once AI really takes off. SoundHound, there's so many voice control things that are about to hit market that not all of them use SoundHound's technology, but SoundHound is a very important company to the future of AI. And look what it does here. The second it breaks through the 200 with a vengeance, it keeps riding up, keeps riding up. It had a nice move back in February, March, right when the market started a pump. And then from there, it's consolidated. But as it's consolidated, it hasn't dropped below the 200. It's come very close a few times. It's actually snuck its face below the 200 a few times. But right now, we've got a situation where the stock has just realigned its exponential moving averages, where the shortest duration is on top and the longest is on bottom. So the 10, 50, 200. Now, if this price can stay above the 10, I think we're going to see another move similar to this. Maybe not as big. This is a relatively large move. 164 to almost $9. That's a big move. So is that going to happen again? I don't know. It could, but it's certainly looking healthy because it's staying above the 2. Stocks generally, when they have a big move like this, will almost always check back to the 200. It's just kind of what happens. And now I said almost always. So I encourage you to, if you are looking at stocks and you're looking at potentially investing into something, don't just buy it. Don't just say, I don't want to miss out. At least look at this. This is relatively simple to do, and you don't even need to buy any stocks to do it. You can just go through Robinhood or whatever you have and look at stocks on the yearly time frame with a daily interval. Notice what happens when I change just for example, if I change this to weekly. There's less information here to me that is useful. Yeah, it is sticking around the 10-day EMA, and I'm sure that's useful in some way. I don't know. What I do is the daily interval on the yearly, and then sometimes if I want to see in this area a little bit better, I'll choose the 3-month on the daily, and that just zooms it in for you a little bit. It's the same resolution, it's just a tighter picture. So you can kind of go through your stocks and or your potential purchases and see if it's a bad idea. Does it look like Amazon? Did it just slice through the 200? Does it have some work to do to get back above the 200? Or is it something like SoundHound, where on the yearly, it's never gone below the 200 post this big move, and it appears as though it's holding its resistance here, or its support. So that's pretty much it. I just wanted to share that information with you guys, and if you found it interesting, cool, share it with somebody. Once again, none of this was financial advice. This is my own opinion. These are my own ways of going about the stock market. So if you find this information useful to you, go ahead and put it in your Rolodex of information that you know about the stock market and use. But don't ever buy a stock just because you feel like you should. Because if you feel like you should, you probably shouldn't. Always check the moving averages and get a basis for what you're buying, because you might buy it and you might be sitting on it for a while before it comes back to where it is, where you purchased it, or it might just dump and you might lose a lot of money. But remember, you never lose money if you don't sell. Although at some point you have to sell. So, no, none of this is financial advice, and I hope that this all finds you well. And if you guys have any questions, just ask me in the comment section. All right, guys, talk to you soon.